From Harry Hurley Way in the world's playground to the broadcast pioneers of Philadelphia Hall of Fame.
I want to congratulate my friend, Harry Hurley.
You're about to find out why Harry Hurley has been named to the Talkers Magazine list of the 100 most important talk show hosts in the nation. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 104.1.
Thanks very much and welcome back. It's 5 minutes past the hour. Chuck Malamut is here on a special day, and we're very happy about it. The following program that you're about to listen to is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member, SIPC. Good to see you, Chuck. How are you, my man?
Good morning, Harry.
Great to be with you.
And welcome back.
It's wonderful to be back.
I see that you made it through your vacation. I know that we texted a few times, and you were challenged, but you rose to the occasion and you took one for the team.
We did. We rallied, and by the way, each member of the team went down one by one.
I'm not going to ask who was the poor soul that went down last.
Lauren.
And she was able to get on the.
Yeah.
She got through everything in time to get home.
As you know, if you ever have flown when you have a ear sinus issue, which is what this thing is, it's a whole horrible virus. Your ears feel like they're going to explode when you come down from
I've had that once.
Feet.
It's just an awful feeling.
Terrible. And even little Noah had the cold, and so his ears hurt. And that hurts me when I see him. He sits about a chair or two away from me on the plane. We sort of have our own seats that we have regularly, where we sit. And I was watching Noah with pain in his ears, and it made me sad. Chuck, on a happier note, the King's Crown is here in the studio.
Harry, I did not catch the entire 2 hours. Did you go into a descriptive detail?
Yes, you know me.
with your wide range of listeners.
Yeah, it's like a you know me. I paint a picture.
Did you post it on Facebook?
Yes,
yet?
I did.
Okay.
Yeah,
right,
you could like it later. But Chuck, you have seen the King's Crown up close and personal. And by the way, it's two crowns, and there is a reason for this. Paul Rotella knows these kinds of important things. The ceremonial crown, and incidentally, the satin pillow was damaged, or it would be sitting on a satin pillow inside the glass case. But so the ceremonial crown is there in all its glory with the fleur-de-lis and all around it and all that. The crown on the top, Chuck, is the crown you go to war with. So this is a ceremonial crown. This is the daily crown. Two crowns.
I was very impressed with Paul's show on Friday. I listened to a good portion of it, and as I got to work, I reminded myself I have to tune in at like 9:30, I think it was, as he had President-elect Donald Trump on the air.
Yes.
It was quite a feat that he was able to grab the president-elect and have him for an extended period of time. So good job, Paul.
Yeah,
congrats.
Nothing surprising me where Paul is concerned. So, Chuck, the Dow is going wild. The S&P is just a little bit off its all-time high. The Trump rally continues.
Well, Harry, it is just a little different being here on a Wednesday because now we have 2 trading days in for the week. I think if you take a step back and you look at last week, it was the first time that from the time we elected Donald Trump as president that U.S. equities actually were a little bit lower for the week. The S&P was down slightly less than 1%. And what happened on Monday and Tuesday, we've had the continuation of the rally. It seems to be a little more muted now, and a lot of strategists and a lot of analysts and a lot of technicians are actually sitting back and sort of waiting to see, okay, you said it, so now you have to deliver the goods.
Let me ask you a question, Chuck, because you'd be the best person to answer this because you are savvy when it comes to geopolitical issues. You're one of the few a long, long time ago that recognized geopolitical issues and their impact on our financial markets. Donald Trump is unfiltered. He is unconventional. He is capable of saying anything at any time, like he's walking out of Trump Tower and he decides to tell the media that he thinks Boeing is these are not his exact words, but that Boeing is basically ripping us off and we're not going to spend $4 billion on Air Force One. Now, Boeing came out very, very quickly and said, whoa, we've only spent $170 million, but that's so far. They even admit it's going to be $2.7 billion and beyond. And we always know in these types of things, the cost overruns come in. Obama scrapped the new helicopters for the president because it had gone beyond $4 billion. That's a helicopter. Yeah. So what I'm getting at is not just this one issue, but what do you say when literally Donald Trump may just pick any company? Like Boeing went down a bit. I know they came back, after they rallied back after they spoke up for themselves, but markets, are going to be impacted by this.
Well, I think, Harry, you kind of need to take a look at the way that Donald Trump is communicating for the most part with the American public, and he's pretty much bypassing, the elite media.
Yeah,
and the fact that he goes and he actually, I'm as we're chatting, there was a post this morning that Trump basically said, Twitter is a new form of social media, is a new form of communicating with the American public, and I'm going to continue to do that. And as a result, the media can't take the story
and
twist it, massage it, do whatever they want to do with it, and then recreate it. So it's something that it's sort of like, Harry, think about 8 years ago. We were told multiple times, endless, it's the new norm. It's the new norm.
Yeah.
And so now that we are through the 8 years of the new norm, the question is, from a communication perspective, is this, quote, the new norm? And if that is the case, which it probably will be to a certain extent, Trump will, the media will have to reinvent itself to be able to effectively communicate with the president.
And they're trying to find their way. They really want to hammer him. They want to get all over him, but they still want to have access. They're feeling their way around the most unconventional political figure, probably in American history, but certainly in their lifetime. Incidentally, Chuck, Paul Rotella checked in and wanted to thank you for your very kind remarks.
You're welcome. Harry, I'm not going to talk about other sorts of media, but there was a big to-do, the opening act of Saturday Night Live with, Alec Baldwin. Yeah. I thought, look, if you look at it and you're not thin-skinned, it's actually pretty comical.
But I'll tell you where it's fair. The same week, they also did In Search of Hillary,
right.
And they were looking in the woods in Chappaqua to find her like she's Bigfoot. So as long as you hit each side, this is the one thing the media has, in my opinion, Chuck, that they have been unable to do because they're so biased. And it's such a shame. If you hit each side fairly funny the same way, you're going to have people on both sides laughing at both sides of the skits.
Exactly.
So they did, I have to say, they had been very unfair to Donald Trump. They weren't doing any of the hits on Hillary. But this thing they did, ladies and gentlemen, if you haven't seen it, Hillary's running through the woods, and somebody says, "Hillary, I'm just here to thank you," and she's running by, yelling, "Thank you." You just see little shadows. It is hysterical to see. Also, Chuck, I've noticed something. I don't know if it's a trend, but I've seen it twice. They're reporting for the first time ever the unemployment rate, and I know we're going to talk about November payrolls and some things in a little bit. We're going to give you the opportunity to talk about the market update first, but I just want to slip this in real quick. For the first time in the past 8 years, I am seeing the media actually report, not just one outlet, saying the unemployment is 4.6%, but the actual unemployment is 9.9%.
The actual due to a drop in the, quote, the participation rate.
Right.
So,
and they're explaining that the 4.6% is deceiving because, let's face it, that model was set up that it could never be better than 6%. 94% employment was considered 100% employment, because there would be 5 to 6% of the people either too sick, mentally, physically unable to work. So to have for all these years, and I understand why they wanted somebody to win, and so they just made it look better than it was. And it was frustrating to me to know that we do not have a healthy 4 point to 5 point something.
It's a matter, Harry. It's a matter of the quality of the jobs, not so much the quantity. And are you in fact counted multiple times if you have several part-time jobs,
or not at all? If you are quote unquote discouraged. And that can happen in as short a period of time as 30 days. So if you can just take somebody out that would be in the unemployment rolls and just say they're discouraged and they're out, that's the biggest part of what has been a scam in reporting these low unemployment numbers.
Yeah, I'm thinking, Harry, as you kind of fast forward it, the numbers will be, quote, more legitimate, where they report not one but 2 numbers. And the other item that we have to be very, very careful and watch, not only the unemployment rate but the participation rate, but what is happening to average hourly earnings, because that is a key driver to the economy, consumer spending, and ultimately, it all kind of intertwines with respect to inflation. So there's three. I think there are 3 factors that have to be really looked at each and every month as the unemployment number comes. So, average hourly earnings, Harry, in the month of November fell for the first time since actually a year ago, last December, and they dropped 0.1%. Following a very, very healthy gain of 0.4% in October. So the question is, if you average the 2, you're +4 -1. Average +1.5 for the 2 months. So sort of on a go-forward basis, are we able to increase the average hourly earnings and have what I'll call a legitimate unemployment rate that we can look at?
Great analysis by the best in the business, in my humble view, Chuck Malamut, in his 26th year as the exclusive financial advisor for the Hurley in the Morning program. To reach Chuck and his team, the Malamut Group at Morgan Stanley's Northfield office, where Chuck is the managing director, 609-383-2010, 609-383-2010, and let Chuck and his team prove to you their concept of total asset management coupled with the all-important asset allocation. Brief time out. We're going to step aside for a few minutes. When we come back, Chuck will continue his market update. If there's any more about the November payrolls in the job market that Chuck wants to share with you, he will. Improvements in the manufacturing sector, a topic for Chuck's program today. Consumer confidence and where that stands. Is it improving? Is it declining? Chuck has the answer. And the bond market. We'll get it all in. And I do want to share, I want to hold Chuck harmless for this comment as we go into the break. I was not surprised that Time Magazine picked Donald Trump as Man of the Year. How couldn't you? The first citizen president in American history. But they actually put that he's the president of the divided states of America instead of giving him a clean win. Just give somebody something that you disagree with everything. That's what our country's about. So people that, do you think that I found out upon my return that there were all these letters, these hate letters basically about me in the local newspaper that I write for. The Press of Atlantic City owns the Current and the Gazette newspapers. I wrote a great column. I thought it was terrific. And there's these letters. I want people to have the right to disagree. The other side doesn't. Brief time out. We'll be back in just a few minutes.
Hurley in the Morning.
With Chuck Malamut, it's 24 minutes past the hour. Chuck Malamut is the official financial advisor to the Hurley in the Morning program, and I don't believe in the entire 25-plus years that we've done this program that Chuck has ever done his program on a Wednesday morning. Maybe with extraordinary developments and some things, we would call Chuck to weigh in on something that may have happened where a Wednesday appearance would take place. But typically, 100% of the time, you will hear Chuck on Tuesday mornings in the 8 o'clock hour. So this is a nice shot for those maybe that aren't available on Tuesday to hear Chuck on a Wednesday, and he talks all about financial matters. Chuck, anything by way of the market update that you didn't finish?
No, Harry, I think we are through with the market update. I think we covered the November payroll number, and it's now on to, I think the next topic we're going to chat about was
manufacturing.
So if you look at the manufacturing sector, which is very, very important, obviously, to our economy, it is gaining some momentum. As the previous headwinds that we had, with respect to the lower oil prices, that is all sort of gone by the wayside. And while you were away last week, we had a tremendous rally in oil. So now what is happening is that if you look back, the Institute for Supply Management manufacturing survey came in front of expectations. The output index reached its highest level in the last 20 months. So
combined with OPEC saying they were tightening the spigot.
Well, yeah, actually what is happening is that with OPEC, they agree, OPEC and Russia agreed to cut the production, and that drove oil prices through that $50 barrel number and pushed energy stocks significantly higher, last week. That rally, has continued, has become a little muted. But if you take a look at, Harry, the price of oil, West Texas, as we refer to it, 51 as a couple days ago, $51.67, and we were $37.15 at the end of last year. So that represents an increase of about almost 40% year over year. Now, I know where you're going.
I know you know where I'm going, but I want to see if you know where I'm going.
So your question is, well, Chuck, what happened to the price at the pump?
Yes, and then I have a follow-up.
Okay, so interestingly enough, the price at the pump, nationally speaking, is currently at about $2.15 a gallon. We were $2.03 at the end of last year, so that represents an increase, we'll call it about 6% or so. So oil or the price at the pump, fortunately, has not followed suit at the price of West Texas crude, as it's referred to. In the meantime, something that we really don't talk about a lot is natural gas. And natural gas, Harry, believe it or not, was at $2.28 a year ago, and now we are at $3.41, which represents almost a 50% increase over the course of the year.
Wow. Here's my follow-up. Donald Trump is going to have a whole new philosophy with EPA. There'll obviously be a new EPA administrator. There are a lot of executive orders and a lot of other executive action that has curtailed the American potential in terms. Right now, we're able to produce half of what we use each day in terms of petroleum. We can do better than that. Shale, Keystone XL pipeline, whatever's happening in the Dakota area where the protests stopped all that pipeline. I think that the Trump doctrine in terms of energy is going to be for America to be energy independent. This, in my estimation, as a layperson, we'll see if you buy into it at all, this would change everything. If we don't need any or much foreign oil, doesn't that upset world markets?
Well, Harry, I think if you take a look at last week's action and the fact that OPEC, we don't know what they're thinking about that, but why did they in fact cut production? I guess that is one of the questions to be asked. And
isn't it because they want to raise the price?
Exactly. So now, if we're able to manufacture more, then obviously that's going to have an impact as we become energy independent. I guess is the best way to put it. But it's not just what's happening with energy. Also, take a look at financial services. Dodd-Frank as a perfect example. Here was a 2,200-page document, and there's a fairly high probability that Dodd-Frank's not going to get scrapped, But I think the bill will become a little more user-friendly, to the financials. And as a direct result of that, Harry, then, if you take a look at last week, the number one and number two sectors, as far as, you get this movement of money. Energy was the number one best performing sector. Financials was the number two best performing sector last week. And year to date, energy is now up 25% and financials up about 19%. So you're seeing the money move, and a lot of that, and we'll cover this in a few minutes, is money is moving out of fixed income, pushing interest rates higher. And for the bond buyer that hasn't seen, this has not really happened, Harry. We've had an increase in interest rates very, very quickly. It's been a long time. The last time this actually happened, if you remember, was the taper tantrum,
yep,
which was back in 2013, when expectations of an increase in interest rates by the Federal Reserve triggered a bond sell-off. So this is a little bit different. This was more market-driven, where the market was looking at potentially what could happen in the next administration. But it's like anything else, whether it's fixed income or equities, the markets always have a tendency to overshoot in either direction. Moving 50 basis points virtually within a week is pretty much unprecedented. So now the 10-year, as we know it, is settled into roughly 2.38%, and we'll see where we go from here.
Halftime break. It's 31 minutes past the hour. You're listening to Chuck Malamut, the exclusive financial advisor for the Hurley in the Morning program, the Hurley in the Morning charity for that matter. And Chuck leads. He's the managing director of his group, the Malamut Group at Morgan Stanley's Northfield office, for all of your financial planning needs. And when I say all, I mean all. If you are right now planning for retirement somewhere down the road, if you're planning for college building, vacation planning, any financial type planning, Chuck Malamut is your man. 609-383-2010, 609-383-2010, to our good friend Mike, who wrote into the program asking about, is there still hope for the Keystone Pipeline, or is it dead? I wrote him back, Chuck, absolutely hope. I said it's going to happen. President Trump can actually approve this without Congress. This was all approved. The EPA, I think people forget, Chuck, the EPA approved the Keystone XL pipeline, which is going through multiple states. It's all approved. What happened is the president got in the way with a phony executive review of the process, and then he got himself past the election by making it seem, the midterm election of 2012, making it seem like he would approve it after the election. I always knew and said it on air that this is an absolute scam, that if he was going to approve it, he would approve it before, but he did the smart thing politically, because the people who wanted him to not approve it held hope that he would not approve it. The people that wanted it approved felt hope that he would approve it. It was as dirty gets, dirtier than dirty crude. And Trump can just immediately lift the shackles from this project. There's no congressional action. This was an administrative, executive overreach, and it's a disgrace, because this is a game changer, and I believe it's going to happen. A brief time out. Chuck continues next. With Chuck Malamut, your official, my official financial advisor. Consumer confidence, Chuck, is it improving?
Harry, consumer confidence is probably one of the best measurements that we can look at as on a go-forward basis. And not only consumer but also business confidence have advanced pretty significantly from the night of the election. Now, what has happened that has increased short-term U.S. economic activity. Now, on the flip side, something that we chat about fairly often is what happens with mortgage rates and interest rates. So interest rates moving, the 10-year moving up a half a point in a relatively short period of time, and moving virtually 100 basis points or 1% from their July lows, is put a pretty big damper on mortgage rates. Mortgage rates moved significantly 2 weeks ago. They always measure the percentage increase or decrease in mortgage applications. Last week, Harry, I believe, was down 7%. Big number. Now this week, it was just reported this morning, down 0.7%. So what has happened is that they've not only the equity markets but the fixed income markets. We went through, the market euphoria and the bond market sell-off. The market seems to be, on a more of a steadier course and sort of firmer footing. And that being money moving out of fixed income, money moving into equities, and so I guess your favorite expression, is this the new norm? So what is happening is that Treasury yields, as we look at them over the next couple years, I think we're going to see an additional upward pressure, but we're not going to see that big violent move that we had. And what is happening is our clients that own fixed income for the longest time have never really experienced a downward trend with respect to prices, which ultimately they look either online or they look on their statements, and I'm sure your listeners are doing the same, and they're saying, oh my goodness, I never realized that that bond prices can in fact move down, because we all got a little spoiled in a declining interest rate environment. People stretched for yields, and ultimately now that has come home to roost, so to speak.
Chuck, we're in the final few weeks of 2016. This supposed interest rate increase that's going to happen. It's one of the most anticipated events that the Federal Reserve Board does. I guess it's the Federal Open Market Committee that meets. Is that still pretty much all systems go?
Yeah. The Fed meets next week, Harry. They meet on the 13th and the 14th, and around 2:00 on the 14th or so, Janet Yellen, one of Donald Trump's favorites, will actually they'll make the announcement at 2, and usually at 2:15 there is a press conference announcing not only the decision, but more. I think what's really going to be important here is on a go-forward basis, Harry, what the Fed is thinking about with respect to increasing interest rates as we get into 2017.
Like they might do something 25 basis points, 0.25% type deal. That alone it's certainly an event, but the big event will be the language that they use for going forward.
Yeah, Harry, if you look at short-term fixed income, as a perfect example is your relatively short-term 3 month, 6 month, 9 month certificates of deposit. They've already factored in a 25 basis point increase. So that, so it's not going to come as a surprise to anyone when the Fed, assuming the Fed does make the move, when they make this move, if they make this move. I think those that own variable rate loans, tied to, prime, tied to LIBOR, I think they're going to obviously be disappointed, because what will be happening is that, those rates will go up, 0.25% as well.
Chuck, we have a couple of minutes. The bond market.
So, Harry, I think we kind of covered a fair amount of that already. You have now, as a result of what has happened, we talked about Treasury yields. You think about just in July, a movement of 100 basis points on the 10-year to a 238 or actually it was higher. It was like 245, I believe, at one point in time. So what has happened here is that the bond market is continually adjusting as we look at the equity markets. But as we move, as we got through November, Harry, I guess the real question is, how much more room does the equity market have at this point in time? You think about we had on the upside anticipation of tax reform, the fiscal stimulus, the infrastructure spending, as well as improving investor confidence. That pushed the equity markets higher. On the flip side, the bond yields that we chatted about, the rising dollar, are concerns with respect to, can those developments potentially slow economic growth before the positive factors kick in, hopefully sometime next year. So the question is, did we go too far too fast? We're going to certainly, the president-elect's going to focus on pro-growth initiatives, as we kind of chatted about a few minutes ago. So income-oriented investors, fixed income investors, are not happy at this point in time as they're looking at declining bond prices. But I think the one thing that separates a fixed income investor from an equity investor is that if you bought a quality piece of paper, let's say you bought a 10-year corporate, you're going to get your principal back, barring an economic disaster, within a particular corporation. Or if you bought a government, you're going to get your money back. So, now you can buy at higher rates and create more income, and that's again a true testament to dollar cost averaging and having a bond ladder portfolio in place. So, Harry, the things that we talked about 25 years ago, we're still going to talk about today.
It's amazing. That's fundamentals. That's what makes it interesting and what makes you the best at what you do. Chuck Malamut on a special day. Chuck, we look forward to this upcoming Tuesday in your normal slot at 8 o'clock.
Harry, thanks for having me. Welcome back. You look good.
Thank you, sir.
I'm glad everybody in the family's okay, and congratulations. Paul, you did a magnificent job. I'm kind of disappointed that there's only one crown in here.
Well, there's two.
Well,
they're both mine.
Yeah, but they're both yours.
Yeah.
I mean,
now what I love is Chuck has to for today, Chuck has to gaze over my crown to then look at me, to gaze into my eyes, my baby blue eyes.
Where's this crown going?
It's going to stay here, I think, unless Chris Coleman tells me to get it out.
You might need to put it on a lockdown. Somebody might want to take that.
Oh, it'd be terrible. You know what, though? I've left that dollar up there for 5 years. Right there. That dollar on the wall that I won from Linda. And it says, debt paid in full. Chuck, thanks for all you do.
All right, Harry. Welcome back again. We'll
Thank you,
talk to you soon.
Chuck Malamut, the official, the exclusive financial advisor for the Hurley in the Morning program in his 26th year here as our official financial advisor. The program you just listened to was presented by Chuck from Morgan Stanley. The information, views, and opinions expressed are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates, current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Back, if you want to jump in, we're going to have 10 minutes of